You ever notice how everyone right now seems to be investing in something? Stocks, crypto, real estate, whatever. But then you hear that Warren Buffett, the world's greatest investor, is just sitting on $300 billion in cash? $300 billion. That's not pocket change. That's an entire economy parked in a bank account. And here's the crazy part. Buffett's not the type to panic or play it safe for no reason. When he does something this extreme, it usually means he sees something coming that the rest of us don't. Now, I know what you're thinking. Maybe he's just waiting for a deal. Sure, that's part of it. But when you dig a little deeper into what he's actually saying, in his letters, his interviews, his moves, you start to realize there's a much bigger story here. Because if Warren Buffett, the man who made billions by buying when others were greedy, is now hoarding cash while everyone else is still betting on the market going up, maybe that's not just strategy. Maybe it's a warning. And that's exactly what we're going to decode today. What Buffett knows that we don't. What this mountain of cash is really signaling. And what it means for your own savings and investments right now. You ever notice how everyone right now seems obsessed with investing? Your feed is full of people bragging about flipping stocks, timing crypto pumps, or grabbing the next big thing. But here's what doesn't make sense. While everyone else is trying to go all in, Warren Buffett, the greatest investor of our time, is doing the exact opposite. He's sitting on an insane $300 billion in cash. $300 billion just sitting there. And this isn't some short-term pause. This is Buffett we're talking about. The man who built his fortune by spotting opportunities before anyone else is now waiting. Now pause and think about that. Why would the guy famous for saying, "Be fearful when others are greedy," be the one holding back while the rest of the world keeps buying everything in sight? Does he know something we don't? Is he seeing danger where everyone else sees opportunity? That's the million-dollar question, or rather, the $300 billion question. And look, this isn't some doomsday conspiracy or stock market fear bait. Buffett's move actually makes sense when you understand how he thinks about risk, timing, and opportunity. Because while everyone else is chasing returns, he's quietly stacking cash for something bigger. That's the part most people miss. They look at his cash pile and think, he's done. But no, this is his setup. And if you can understand why he's doing this, you'll start to see the market and your own savings in a completely different way. So let's break it down. What's behind this massive cash mountain? What it signals about the economy? And what lessons you can steal from the world's most patient billionaire? All right, so let's set the stage here. Warren Buffett isn't some random investor sitting in cash because he's scared of the market. This is the guy whose company, Berkshire Hathaway, owns chunks of Apple, Coca-Cola, American Express, literal giants of the global economy. And yet, according to Berkshire's most recent filings and Buffett's 2024 shareholder letter, they've been selling more stocks than they've been buying. So here's where things get interesting. At the end of 2024, Berkshire Hathaway had over $300 billion in cash and short-term treasury bills, the largest cash pile in the company's history. To put that in perspective, that's more money than the entire GDP of countries like Finland or Chile. It's that big. And what's Buffett doing with it? He's sitting tight. Now, normally, Buffett loves using downturns to scoop up deals. That's how he bought major stakes in banks during the 2008 crisis and scored billions in profit. But this time, he's just waiting. Why? Because he's not seeing any fat pitches, as he likes to call them. Those rare, obvious opportunities where a great company is selling for less than it's worth. In his own words from the 2024 letter, Buffett basically said that good opportunities are rare right now, and that Berkshire would rather keep cash ready for when things actually get attractive. But there's another layer to this. You've probably noticed the economy looks confusing. Interest rates are still high, inflation is cooling but not gone, and everyone's unsure whether we're heading for a slowdown or a soft landing. That means borrowing money is expensive, deals are riskier, and valuations, the price tags on companies, are still sky high. And here's the thing. Buffett hates overpaying. He's always said, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. So instead of forcing himself to buy okay opportunities, he's choosing patience, something 99% of investors just can't do. Now add in one more factor. Buffett is 94 years old, and there's a CEO transition coming soon at Berkshire. CNBC even mentioned that as his handover nears, the company's moves are being watched more closely than ever. That adds another reason to be cautious. No one at Berkshire wants to make a huge risky deal right before the torch gets passed. So when you put all of that together, record high valuations, uncertain economy, leadership transition, Buffett's mountain of cash doesn't look strange anymore. It looks strategic. It's like he's standing at the poker table, cards in hand, everyone else shoving their chips in, and he's just watching, quietly, waiting for the table to flip. Because Buffett knows when everyone else runs out of money, that's when opportunity shows up. So let's talk about the question everyone's been asking. Why on earth would Warren Buffett, of all people, hold on to $300 billion in cash? Because, let's be honest, most of us were raised with the idea that cash just sits there. It loses value. It doesn't work for you, right? So why would the smartest investor alive go against his own advice and stack cash like a dragon guarding gold? The answer is simple, but genius. Buffett isn't hoarding cash. He's loading ammunition. See, to Buffett, cash isn't dead money. It's optional money. It gives him the ability to move instantly when opportunity appears. No loans, no approvals, no begging investors. When everyone else is panicking, Buffett's sitting there saying, finally. He calls this keeping his powder dry. And that's exactly what he's doing right now. Think of it like this. Imagine there's a once-in-a-decade sale coming, but nobody knows when it starts. Everyone else already spent their paycheck buying random stuff at full price. Buffett, he's standing there with $300 billion in his wallet waiting for the doors to open. When the market panics and prices crash, he's the only one who can afford to buy everything worth buying. That's power. That's patience turned into profit. But there's more. Cash also acts like a safety net. Berkshire Hathaway isn't a small hedge fund. It's a massive collection of companies, from Geico to railroads to utilities. Having a huge pile of cash means they can handle anything: economic shocks, disasters, even buying out other businesses when everyone else is bleeding. In his 2024 shareholder letter, Buffett literally said that he and Charlie Munger always kept at least $30 billion in cash, but now it's 10 times that. Why? Because the world's riskier, deals are more expensive, and competition is fiercer. He'd rather earn a modest 5% in treasury bills today than lose 20% in a bad deal tomorrow. And that right there is the biggest lesson. Buffett isn't chasing returns. He's protecting opportunity. He's trading short-term excitement for long-term dominance. Here's something he once said that perfectly captures this. You don't get paid for activity, you get paid for being right. That line sums it up. Everyone's racing to do something with their money, while Buffett's doing the hardest thing in investing: nothing. But that nothing is actually strategic waiting. Because in Buffett's world, markets are like seasons. Sometimes everything's in bloom. Stocks are high, optimism's everywhere. But if you plant seeds at the wrong time, they never grow. He's waiting for winter, when prices fall, and the soil's rich for planting again. And here's what's wild. This strategy isn't just for billionaires. It applies to you and me. You might not have billions, but having even a few $1,000s in dry powder, savings that you don't touch, gives you the same advantage. When others panic and sell low, you can calmly buy high-quality investments at a discount. So no, Buffett's not scared. He's not confused. He's ready. He's sitting on $300 billion, not because he's waiting for luck, but because he's waiting for math to make sense again. He knows that sooner or later prices will fall, fear will rise, and that's when the real money is made. That's why the cash is king right now. And when the time comes, he'll be the one making the rules while everyone else tries to recover. So let's rewind for a second and look at what's actually happening here. Warren Buffett isn't just another investor with opinions about the market. He's the chairman of Berkshire Hathaway, one of the largest companies in the world, a company that owns massive stakes in Apple, Coca-Cola, American Express, and dozens of others. Basically, he's not playing in the small leagues. He is the market for a lot of people. And right now, Berkshire Hathaway is sitting on a record $300 billion in cash. Let that sink in. $300 billion. That's more money than most countries have in their central bank reserves. And this didn't happen overnight. Over the past few years, Buffett has been quietly selling more stocks than he's been buying. He's been trimming positions, taking profits, and letting the cash pile grow, while the rest of the world is still shouting, "Buy the dip." Now, if this were any other investor, people might call it fear or indecision. But when Buffett does it, it's different. Because this is a man who built his empire by buying when others were terrified. During the 2008 financial crisis, while the world was collapsing, he stepped in and made deals with Goldman Sachs and Bank of America that later made billions. So when that guy suddenly stops buying, you have to wonder, what's he seeing that we're not? Let's look at the bigger picture. We're in one of the strangest economies ever. Interest rates are high, inflation is still sticky, the housing market's cooling, and corporate profits are starting to wobble. For regular people, that means higher credit card bills, more expensive loans, and slower pay raises. For investors, it means uncertainty, a lot of it. And Buffett hates uncertainty. Not because he's scared of risk, but because he's allergic to bad deals. If prices don't make sense, he simply waits. No FOMO, no chasing trends. In his 2024 shareholder letter, he practically told us his mindset. He said that while Berkshire always keeps a substantial majority of their money in equities, they're also fine holding huge cash reserves until they find something worth buying. In other words, it's not about fear, it's about discipline. And that's the part most people miss. Buffett isn't sitting on cash because he's bearish on America. He's sitting on cash because he knows value and timings matter more than activity. He's said it before. The stock market is a device for transferring money from the impatient to the patient. Right now, he's proving that quote in real time. But there's another subtle reason behind his caution: transition. Buffett is 94 years old, and Berkshire Hathaway is preparing for a future without him. CNBC recently pointed out that as his CEO handover nears, the company's leadership is becoming even more careful about the moves they make. Think about it. If you were about to pass the baton on a trillion-dollar empire, you wouldn't want to gamble on short-term plays either. So what's the result? Berkshire ends 2024 with a mountain of cash, minimal new deals, and a company that's basically saying to the market, "We'll wait." And that's not weakness, that's confidence. Buffett knows something the crowd always forgets. Patience pays. It's like watching a poker game where everyone's going all in on mediocre hands, and Buffett, cool as ever, just folds, waits, and sips his Coke. Because he knows sooner or later the cards will fall his way. And when they do, that $300 billion turns into firepower. Because while everyone else is hoping for luck, Buffett is preparing for opportunity. All right, so let's get into the heart of this. Why would the greatest investor alive, the man who made billions by investing, suddenly choose to sit on the sidelines with $300 billion in cash? Because for Buffett, cash isn't laziness, it's leverage. To him, cash isn't doing nothing, it's being ready for anything. Think of it like this. When everyone else sees cash as a seatbelt, something boring you only use in emergencies, Buffett sees it as a jetpack. It doesn't look exciting when it's strapped to your back, but when the market hits turbulence, that's what keeps you flying while everyone else crashes. Let's break this down the Buffett way. First, there's optionality, a fancy word that just means freedom to act when others can't. Most investors, especially the big ones, are always fully invested. They don't have spare money sitting around, so when markets fall, they can't buy more. They just have to watch. Buffett, he's got 300 billion reasons to wait. If Apple's stock dropped 30% tomorrow, which would wipe out trillions of dollars of market value, Buffett could quietly write a check and buy another $10 billion worth without blinking. He doesn't need loans. He doesn't need approval. He has dry powder, ready to fire when everyone else runs out of bullets. That's his first edge. Cash gives him power in chaos. Now, the second reason, and this one's classic Buffett, is safety. Berkshire Hathaway isn't a startup. It's a massive empire that owns insurance companies, railroads, energy firms, and consumer brands. That means it needs a cushion, a safety net for whatever comes next. In his 2024 shareholder letter, Buffett reminded investors that Berkshire always keeps at least $30 billion in cash to weather any storm. But look at what's happening now. The world feels riskier, interest rates are high, valuations are stretched. So instead of 30, he's holding 10 times that amount. He's not doing it because he's scared. He's doing it because he's disciplined. He knows one truth most people forget. In uncertain times, cash buys peace of mind. And honestly, that lesson applies to you and me too. Having a bit of boring money on the side, money that's not tied up in risky investments, isn't wasted. It's what lets you breathe when things go south. Now, here's the third piece of Buffett's logic, and it's brilliant. Cash gives him negotiating power. When the next financial storm hits, and it always does eventually, Buffett doesn't have to beg for deals. Companies come to him. That's what happened back in 2008. While the financial world was burning, Goldman Sachs and Bank of America turned to Buffett for help. He wrote them multi-billion-dollar checks when nobody else could. And in return, he got sweetheart deals, preferred shares, guaranteed dividends, and options that made him billions later on. Those once-in-a-lifetime moments only happen to people who are liquid when others are desperate. So yeah, Buffett might look quiet now, but he's not being passive. He's being predatory, in the smartest possible way. He's letting the noise play out. He's watching. He's patient. Because when fear returns, and it always does, that $300 billion becomes a weapon. And here's what's crazy. You can use the same principle even without billions. You might not have Berkshire's balance sheet, but having even a small opportunity fund, a few $1,000s sitting, waiting, gives you your own version of Buffett's power. When the market dips or a great investment pops up, you can move instantly while everyone else hesitates. That's the hidden superpower of cash. It lets you be calm when everyone else panics. Buffett isn't chasing short-term returns. He's waiting for inevitability. He knows the market moves in cycles. Prices rise, greed takes over, and eventually, reality brings everything back down. And when that happens, Buffett's not the guy saying, "I wish I had cash." He's the guy saying, "It's my turn." So yeah, $300 billion in cash sounds boring. Until the world starts shaking. Then suddenly, that pile isn't cash. It's ammo. And Buffett's just waiting for the right moment to pull the trigger. So here's where it gets really interesting. Because Buffett's $300 billion cash pile isn't just a personal strategy, it's a message. And that message says something big about how he views the market right now. Think about it. This is a man who has spent his entire life looking for bargains. He's not the type to hide in the corner or time the market. If anything, he runs toward chaos. He loves fear. He made billions off of fear. So if he's sitting on record-breaking cash instead of hunting for new deals, that tells us something. It tells us that Buffett doesn't see any real bargains out there. And when Warren Buffett, the guy who can buy almost any company in America, says, "I don't see anything worth buying," it should make everyone else pause for a second. Because that's not random, that's a signal. Right now, most investors are still partying like it's business as usual. The stock market's hitting new highs. Social media's full of buy-the-dip hype. And people are treating 5% interest rates like they're temporary. But Buffett's sitting back quietly, basically saying, "You all go ahead, I'll wait." And that's what separates him from the crowd. See, the crowd only looks at the headlines. Markets up, tech booming, soft landing confirmed. But Buffett looks at the math. He sees company valuations. The prices people are paying are stretched to levels that don't leave much room for mistakes. He sees businesses with slowing profits still trading like it's 2021. He sees uncertainty in global growth, inflation not fully tamed, and interest rates staying higher for longer. Put all that together, and it paints a simple picture. The market might look healthy, but underneath, it's a little overheated. And Buffett doesn't like heat. He likes value. So what does that mean for you and me? It doesn't mean panic, it means pay attention. Buffett's cash mountain is basically a giant caution flag waving over Wall Street. He's saying, there aren't many deals worth chasing right now. Be careful what you pay for. And that's important because most people forget. You don't make money when you buy stocks. You make money when you buy them cheap. Buffett's waiting for the moment when fear returns. Because fear always returns. When that happens, when everyone else starts panicking and selling, that's when he'll step back in and start buying again. That's when that $300 billion turns from idle to weaponized. And here's the thing, you can use the same logic. You don't have to predict recessions or time markets, but you can learn from the tone Buffett's setting. If the world's most successful investor is sitting on his hands instead of chasing the hype, maybe you should slow down too. Maybe don't rush to buy every hot stock your friend posts about. Maybe keep some cash aside and wait for prices to make sense again. Because what Buffett's doing right now, holding cash, being patient, ignoring the noise, is exactly what the market isn't doing. And that's why it matters. His move signals that we might be at one of those rare points where discipline beats excitement. He's not trying to predict a crash. He's just acknowledging reality. Prices are high, opportunities are few, and patience pays more than FOMO ever will. So next time you see headlines about Buffett's giant cash pile, don't think he's scared. Think he's seeing something I'm not. Because when Buffett's quiet, markets are usually loud. And when Buffett finally moves, that's when the real story begins. Now, before we jump to any big conclusions, let's pump the brakes for a second. Because this part is really important, and it's where most people get Buffett completely wrong. When the internet hears that Warren Buffett has $300 billion in cash, people immediately start yelling, "Buffett's bearish. He's predicting a crash. He's lost faith in the market." But none of that is true, not even close. Here's what people forget. Buffett has never been a pessimist about the future. In fact, in almost every shareholder letter he's written, he repeats the same belief that nothing beats the long-term growth of American businesses. In his 2024 letter, he literally said, "We will forever deploy a substantial majority of our money in equities." Translation? He's not out of the game. He's just waiting for a better pitch. So no, Buffett hasn't suddenly turned into a doomsday prepper stacking gold bars in his basement. He's just being selective. He's saying, right now things are too expensive. I'll wait until they make sense again. That's a huge difference, because sitting on cash doesn't mean you've lost faith. It means you've found patience, and that's the mistake most investors, and honestly, most of us, make. We think doing nothing means missing out. But Buffett knows the truth. Doing nothing is still a decision. It's the decision not to settle. Think about it like dating. Just because you're single doesn't mean you've given up on love. You're just waiting for someone worth your time. That's Buffett right now. He's not anti-market, he's anti-settling. Now, there's another trap people fall into. They try to copy Buffett blindly. They hear Buffett's holding cash, and suddenly they're like, okay, I'm selling everything. Number. Stop. Don't do that. Buffett's situation is nothing like yours. He's running a company the size of a small country. His version of cash earns billions in interest every year just sitting in treasury bills. Meanwhile, for regular people, holding too much cash can actually mean losing value to inflation. So when Buffett sits on $300 billion, that's a strategic move. When you sit on all your money, that might just be fear in disguise. And Buffett would tell you that himself. He's always said that individuals, especially young investors, should stay invested in great businesses or low-cost index funds. The key is not whether you hold cash or stocks, it's whether you understand why. So if you take one thing from this part, let it be this. Don't interpret Buffett's patience as panic. Don't assume cash means bearish. And definitely don't copy billionaires without context. Because the lesson here isn't to mimic Buffett's portfolio, it's to mimic his mindset. He's not trying to time the market, he's trying to respect it. He knows that opportunities come in waves, and that it's okay to step back between them. And when you think like that, when you start valuing discipline over action, you begin to see money the way Buffett does. Not as something to constantly move, but as something to position. Because in the end, that's what separates average investors from legends. It's not who trades faster, it's who waits smarter. All right, now that we've broken down what Buffett's doing and why, let's talk about the part that actually matters to you. Because unless you've got $300 billion sitting in a vault somewhere, and if you do, call me, what can you actually take from this? Here's the thing. Buffett's not giving us a secret code to get rich overnight. He's showing us a mindset. And if you understand that mindset, you can completely change how you handle your money, even on a small scale. Let's break it down into a few lessons that you can literally start using today. Lesson 1. Don't rush just because everyone else is. Right now, everyone's chasing something. Stocks, crypto, side hustles, the next AI company. It feels like if you're not investing every second, you're falling behind. But Buffett's move is proof that waiting can be powerful. You don't have to pour money into whatever's trending just to feel productive. Sometimes the smartest move is to pause, watch, and build your strategy. It's like playing chess. You don't make a move every second, you wait until the right moment wins the game. Lesson 2. Keep your own dry powder. Buffett calls his cash pile dry powder, money he keeps ready to use when opportunity strikes. Now, maybe you can't hold billions, but you can start small. That might mean having a little cash cushion on the side, not just for emergencies, but for opportunities. Maybe the market drops. Maybe your favorite stock or ETF goes on sale. Maybe a side business idea pops up that needs a small investment. When everyone else is scrambling to come up with cash, you'll be ready to act, calmly and confidently. That's how fortunes are made, even on a small scale, by being ready when others aren't. Lesson 3. Focus on value, not noise. Buffett doesn't chase trends. He looks for value. He buys great companies at fair prices, not average companies at great hype. For you, that could mean sticking to solid investments you understand instead of following what's blowing up on social media. Before you buy anything, ask yourself, do I actually understand what I'm putting my money into? If the answer is no, that's your sign to wait and learn more. Lesson 4. Be patient, but not passive. Buffett isn't just sitting on his couch doing nothing. He's reading, analyzing, learning, and waiting for the next opportunity. That's how you should treat your waiting phase too. Use this time to get smarter about money. Read, watch, learn. Build your list of companies or investments you'd love to own if they ever got cheaper. Because when the next correction comes, and it will come, you'll know exactly what to buy while everyone else is panicking. Lesson 5. Separate emotion from decision. This one's huge. The average investor reacts emotionally. Fear, greed, excitement, panic. Buffett reacts logically. He once said, "The stock market is a device for transferring money from the impatient to the patient." That quote applies to everything, not just stocks, but life. You win by staying calm when everyone else loses their cool. So before making any big money move, pause and ask yourself, am I doing this because it makes sense or because I'm scared to miss out? If it's the second one, take a breath. Wait, patience pays. At the end of the day, you don't have to be Warren Buffett to think like him. You just have to apply his principles at your level. Keep a cushion. Stay patient. Don't chase hype. Act only when the math, not the mood, makes sense. Because Buffett's not holding $300 billion to flex. He's holding it because he knows the game better than anyone else. The game of timing meets discipline. And here's the best part. You can play that same game too. You don't need billions. You just need his mindset. So the next time you feel like you're missing out, remember this. Buffett's missing out too, on purpose. And that's exactly why he wins. So let's put it all together. Warren Buffett isn't sitting on $300 billion because he's scared. He's sitting on it because he's prepared. There's a huge difference. Most people think success in investing comes from constant action. Buying, selling, trading, always doing something. But Buffett's showing us the complete opposite. That real power comes from knowing when not to act. He's not predicting a crash. He's not timing the market. He's simply saying, right now, the price isn't right, so I'll wait. And that, right there, is the genius of Warren Buffett. He's not trying to outsmart the market. He's outweighting it, because he knows opportunities always come, but only to those who have the patience and discipline to recognize them. That's what that $300 billion represents. Not fear, not hesitation, but patience, readiness, and conviction. It's easy to get caught up in the noise. We live in a world where everyone's shouting, "Buy now," or "Sell before it's too late." But when you zoom out, you realize the wealthiest, Wisest investors are the ones who move quietly and strike only when it truly matters. Buffett's showing us that sometimes the best investment isn't the stock you buy, it's the decision you don't make. And that lesson doesn't just apply to money, it applies to everything: careers, business, even life choices. It's about being strategic instead of impulsive. It's about holding your ground while the world runs wild around you. It's about being ready for opportunity instead of begging for luck. Because here's the truth: Buffett's strategy works not because he's a billionaire, but because he plays a longer game than everyone else. He doesn't need to be first, he just needs to be right. And that's something you can do too. You don't need $300 billion to think like Warren Buffett. You just need patience, perspective, and a plan. You need to remind yourself that sometimes waiting, that quiet, boring, uncomfortable waiting, is exactly what separates the winners from the wishers. So next time you see a market dip or a hot trend blowing up on your feed, ask yourself, what would Buffett do right now? And you'll know the answer. He'd probably smile, sip his Coke, and wait. Because he knows what most people don't. You don't need to move fast. You just need to move smart. So the next time someone tells you cash is trash, remember this moment. Buffett's holding $300 billion worth of trash, and he's about to turn it into treasure. And that's the story behind Warren Buffett's $300 billion cash mountain, and the real reason he's holding it. He's not scared, he's not confused, he's just patient. Patient enough to wait for the kind of opportunity most people never see, because they're too busy chasing noise. And honestly, that's a lesson we could all use right now. Because whether it's investing, saving, or just life in general, the person who can wait wins. The person who keeps calm while everyone else panics ends up with all the options. That's what Buffett understands, and that's what separates the greats from the rest. So the next time you feel like you're falling behind, when you see people online bragging about their crazy returns or their next big win, just remember this: some of the smartest money in the world is doing nothing. Because doing nothing, when everyone else is doing everything, is sometimes the smartest move you can make. Now, before you click away, ask yourself one question. If you had $10,000 sitting in cash right now, would you chase the market? Or would you wait for the moment everyone else gives up? Drop your answer in the comments. I want to see how you think after hearing this. And if this video gave you a new way to look at money, if it made you pause and think, hit that like button. It helps way more than you think. And hey, if you're new here, make sure to subscribe because next week we're breaking down something that connects directly to this: how Warren Buffett actually decides which companies to buy, and the surprisingly simple checklist he uses that anyone can copy. So if you've ever wanted to invest like Buffett without needing billions, trust me, you don't want to miss that one. Until then, stay smart, stay patient, and remember, you don't have to move fast. You just have to move right.